Do it. Okay, 5, 4, 3, 2,
Three,
1.
two,
Wait, what's this called? Big
one.
announcement coming soon? Oh, yeah.
And welcome
5,
back
4,
to the
3.
big announcement coming soon. David and I are up staring at the Bitcoin chart. Just us this week, so we'll be back in the future with Nick and Law talking NFTs as usual, but I think it's a great week to focus on ETFs, foreign currencies, Bitcoin, and trading because we're at a psychological number. David, how you doing this morning?
Yeah, fantastic. Going really well. It's can't be more bullish really. Um, yeah, so I guess we'll get into discussing the bullishness versus any other option. I guess versus Capo's opinion, but yeah.
Oh, that poor dude. I don't know why, but he always seemed like a nice person trying to do the right thing in his tweets. This is just picking up his vibe of like, no, I'm not scamming, I'm not pushing crap. I believe this, and he was wrong, and that hurts because I don't. He didn't feel like he was here to do anything shady. He
But
just had a bad call, and then he tripled down and
yeah,
quadrupled down, and
I wouldn't say he's doing anything shady. Yeah, it's more just like it's a classic case of marrying your bags against all odds or marrying your position against all odds. Like it doesn't make sense when you should have invalidations where like, oh, it would have happened, but yet ETFs went really well and everyone's buying Bitcoin. Okay, that wasn't expected, so therefore it invalidates. But like to just stick with the position and change the reasons for it as you go, yeah, I don't know.
yeah, especially when we hit ETF time, and he still hadn't adjusted, and I was like, oh man, like we didn't get denied, like it's not going to happen. Yeah, the only reason I bring up shady is it. There's now notes on like the KSI tweets about crypto and stuff, and
Definitely, yeah.
it's everything is a cesspool of who to avoid for bad takes and who's trying to push different bags, and I think it's important. First call is this person trying to do the right thing, and then can they like do they have good insights, or are they trying to scam us in the first place?
Yeah, I mean, it's funny actually, if you think about it, generally speaking, if an account has more than, like, let's say, at this point these days, like 150,000 followers, more than that, like more like he and other people have like 500 to a million followers, and those accounts are still posting earnest charts, that, it's just uncommon. Like for like you just that's it belies the idea that you are posting too much to people's biases or your bias, and because sometimes there's just nothing to post, or
Because when
you
you're
went the
saying
wrong
earnest
way.
charts, this is the guys who seem to every day they're posting. It's you post charts and you take trades every day because you're a trader and you're a chart maker, and you're saying even the top day traders look at the chart someday and go, nah.
Yeah, exactly. And I mean, even just trading myself, like I guess maybe I'm just not the personality, but like when you start getting really into it, there's not enough time to do all of that posting. So like you kind of see, I guess, like real traders, they only post a certain amount because they're trading. Whereas other posts will just be like, all right, here's all the profits I gained today, etc. and so forth. Lucky I took this, lucky I took that, but it doesn't show you any of the downsides. Or I don't know, maybe they didn't take it. Who knows? Like, and sometimes they're successful and win. But I guess like if you're looking for the best advice, you have to be careful of big accounts that post too good to be true
Yeah, no one's
promises.
serving up guaranteed wins on a plate. So why are they
Mhm.
going through all the work to share? And some people it's
That's
their
yeah.
trading journal, and some people they're pushing towards followers towards something else. Is what you're saying?
It's the
Is their
language.
first priority trading, or is their first priority posting?
Yeah, or being right. Like it's the language used. Like like if you anyone on Twitter, as soon as they start saying like this will happen or it's guaranteed or there's no chance this won't happen, like I immediately ask why would you say something that is clearly not true? Like it could definitely happen. There's no one side, otherwise everyone would just. So if
It's,
you're being so sure, I mean it underscores like a psychology of you wanting to be right, and that it worries me because you can make a wrong decision.
yeah,
Just keep at it.
and we've talked a lot about first principles, whether it's Bitcoin beliefs or trading beliefs, but things you can't shake. And there's the do you want to be right or do you want to be rich, and then loose beliefs held, or sorry, strong beliefs held loosely. And it has to be strong. We're putting real money in, but like you said, if it doesn't work, are you willing to change? Because the market's changing. And let's actually skip ahead to that, because I want to come back and talk about some currency and supply issues. But things changed. You were talking last week. You had sold some Bitcoin over the last couple weeks prior. You were looking for 32 to come back in, and you're actively managing an account on Economy. That sentiment shifted. A lot of the people we look to on Twitter for the direction of the market shifted as well, and you shifted your beliefs. So we were talking about the mindset of like, what is it like to wait for something that you think might happen? What's it like to be invalidated because the game goes on? You don't sit there and wait for 32K anymore.
Yeah, totally, for sure. This is a really good point. And it's an opportune time to talk about it, because it's like the difference between an investor and a trader, right? So as an investor, you're basically like buying something you believe in and you hope it always goes up. And so the idea that it's going to go down is an unhappy idea, and you don't want to touch it. And throughout the cycle, so the way that I think anyone should do it, I do it, is you have one bag, well, a big bag of hold, and then a smaller bag of trade. So 2/3 of my bags are in hold. They were bought at the bottom when Sam crashed the market, and I just hold through until we see a top sometime in the next year. Then the trading bag is therefore, so you're basically saying I'm already long the market, no matter what happens, by 2/3. With that 1/3, I'm going to trying to like compound those gains over time. And so the thing to understand is, with a holding mentality, yeah, you only have kind of a one-way direction, like waiting till it gets to a really high price and then sell it.
Yeah.
In a trading mentality, you have to be able to flip between them and be wrong like less than one time. So like you want to be right more than you're wrong. And if you're wrong, you want to quickly change your opinion so that you don't lose too much if it's on the downside because you're long, or if it's on the upside because you're short. Which brings you to the hardest choice, right? We sold the market at, I mean, technically I wasn't in Bitcoin, it was all alts. But when Bitcoin was at 42.5, we sold there. It went down to 38, felt like geniuses, it was great. Came back up to 42, like, okay, not great. Or at least like, maybe it's just retested the bottom. And then, and that's when we had the pod. And at that point I was like, yeah, the hope is that we go to 32, but the invalidation's at 46. And so, if holding at 46, right? And so it did that. It went up to 45, starting to get sweaty, gets up to 46. You're like, okay. And then it holds there for over a day, starts the next day at 46.5 and starts bouncing around there before it starts going higher. So we went back in at 46.5. And yeah, gave up like 10% of Bitcoin gain by doing that. But as a trader, protected against like 30% downside. And so it's still worth it because you're not actually really losing too much. You're more protecting against, and the next time you might be right. But you also adjust. So like maybe this time in the cycle, we're not going to have 30% downsides. We're going to have only 20%. I don't know. But yeah, interesting. But either way, the key thing is changing your mind. Or at least, like, as we said, this is what would happen if we hit 46 and hold. Doing that. Like, even though you're like essentially buying the top of the market, now it's at 52 or whatever, right? And so by not buying at 46 higher than you bought before, waiting for that dip, quote unquote,
right,
would have left you out by this point. So you have to kind of eat your loss rather than being stubborn and biased and say, yeah, no, it's still going to happen. It's still going to dip. And then you're like,
well,
then you're 20% down, and then you'd really lose it.
And when you talk about those risk rewards, you're saying there's a 30% downside or a 10% loss. If you play the plan,
loss of gains,
there's a
loss.
Well, right, but I'm just saying of the coming back in higher or being able to rebuy lower. If there's a 3-to-1 ratio, right, and you have to play it right 1 out of every 3 times and make a little bit, or 2 out of every 3. But like you said with the invalidation, if you didn't buy back in and follow the plan, now those original numbers don't mean anything. And in the
Yeah,
future, you're saying
exactly.
there's a 20% down and a much higher up. So if you keep changing your numbers of where your breakpoints are, and keep adjusting tighter, 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 because like you said, you still believe in the bull. The problem would have been, like you said, it hits 45 and it's bouncing, and you want to be right. And instead, you said, no, I made this. You write it down 2 weeks before, whenever you first start your trade, and then you buy in. And last show, you talked about that kind of shutting down of the emotions. You either play the plan or you're a day trader, and your plan works out mathematically so that because it's a probability. Maybe it's right, maybe it's wrong. If you have a
Yeah, and
bigger
this
return and management, because like you said, protecting
exactly.
your losses.
Yeah, because so essentially the worst case scenario played out, right? Thought it would go down, sold it. It was higher when I had to rebuy it. Missed out on 10% gain. Didn't lose anything, but missed out on a 10% gain. And so, like the emotion you're fighting there,
Is I lost something?
yeah, and also like there's a terminal element to the market. So you're like, okay, Bitcoin's only going to reach a certain level. If I miss out on some gains here, I might not get all the gains up to there. When you do that, I think you're also, I don't know, it kind of belies an idea that you don't really believe in crypto. You're really just like, this is the last chance. We've got to really squeeze everything out of the market. Which I don't know, like if that's justified or not, but it tends to, I think, make people very short term. Like they start to make gains and then they expect the same gains like next week. And if it doesn't happen, they're like, oh no, is it over? Like, or like, oh, okay, what should I buy next? And they change the plan that they planned on having that was made in a logical time. and,
Are
and
you
that's the
saying I
key.
got
Like,
sucked in by the super cycle and held a lot of Luna too long?
definitely.
But you're exactly right. I had some mental adjustments when Luna went past $100 last cycle. My wife was one who was like, you got to put some of that in profits, and then it was, am I selling at 98 or 104? Well, it doesn't matter. It's it's so many X gain that we start looking at the percentage, and the percentage is within an X, so it doesn't matter. Take the gains, and then I don't know. I wasn't quick enough, but
I mean,
but
I
yeah,
think
you start
everyone
getting
like,
caught in those short term. We're going to the moon even more and everything instead of just what was the plan?
yeah,
$100 be
exactly.
out.
What was Well, yeah, exactly. And why was that the plan? Why have you changed your mind at this point? And almost always the plan or the mind changing is happening because the price has changed. So if you're changing your plan based on the price, you're losing. Like you are the market. You have to set the plan, and that's why it hurts, right? Like you're taking the position before the thing happens. If you're right, you win. And then at the top of where your plan ends, everyone's really excited and telling you you're stupid for selling, and you sell.
Yeah.
And so it never really feels good except for a short period in the middle where you're making the gains. And it has the other option of if it goes down or it does the opposite of what you were planning, you have to eat that and also whatever. So actually coming back to the last episode, this is also a reason why it's important not to post your trades and stuff on Twitter, because then you're starting to compete with the mind. Your mind is like basically you have an audience to be right or wrong for, and so you don't want it leads you to do, yeah, to just be emotionally baggaged where you don't need to be doing so. You need to be
Well,
able
and
to
you don't
switch
want
your
to try to
opinion.
beat another Twitter account or look at you to be like, I'm the 35th best trader. Why can't I be 33rd? And I'm going to take more risks. And
Yeah. And so actually the turn on also on how it wasn't just that if it went to 46.5 as change and then yay, how did you pick that target? Essentially, that was what a lot of the people I trust were saying, is essentially some of them started to go bullish earlier. One dude was like, yep, buy at 35, 38. We're going long here. It's going up. Another one went, and then it was basically into my last guy was like, yep, it's my position was invalidated. It's going back up. And then that was also around 40. That was actually a couple hours after I bought back in at 46. I was like, okay, cool. Everyone is confirmed. If it goes down, I'm still working on the best opinions available. So you're still doing the right thing at the right time. And that's irrespective of what the price is doing. You just got to keep going, doing the right thing at the right time. And eventually over time, you win on the spread. And because crypto is asymmetric upside, you win really big. But really, it's about consistently winning relatively big, if that makes sense.
yeah, you're gonna miss the 200x, but don't miss the 40x, and you don't need, and you will, but mentally don't beat yourself up over that difference.
Yeah, it's almost like a sliding scale of probability. Like if
Hmm.
you're going for 200x, it's like 0.5% chance you'll do it. You want to come down to like 40x, maybe at a 50-50, maybe like 60-40, 40% chance you will do that.
Hmm.
20%, 20x is, maybe like if you stick to a plan, you actually do it correctly, 75%. And then the more you move up, and then you're just holding Bitcoin and you're kind of guaranteed 5x. Um,
Yeah.
so yeah, it's your risks, but the difference between those X's will be you and your plan and how you're allocating. Because even if you, like you say, even if you have the greatest plan and it's going to go down, and then you continue to hold like Capo does with your plan, you miss the whole upside because your
Hmm.
plan was wrong and you weren't ready. You didn't actually execute an invalidation of that plan and change it.
Yeah, and you can look. So someone has said if you're here reading these tweets, you're looking for justification. You're right. If you're looking at the charts, you're looking for the right answers. And like you said, you followed a couple people when they invalidated at 38 and 40, and you jumped in before your last person you kind of follow said they had jumped in. You could have gone looking for more tweets to tell you that 32 was coming, or you have the same people you already trust their opinion, you followed the plan. But that's the thing is, do you look back at the charts and say it's 46, I'm in, or do you go Twitter searching for hundreds of people who are going to say it's guaranteed to go down and be like, well, they're right, I'm right. And you can find new accounts will tell you anything you want to hear.
Absolutely. Yeah. It's almost kind of like crypto is kind of like a big game, right? It's almost like World of Warcraft in the charts. And so as you play over time, you develop like a guild of people you trust and whose advice you understand, and kind of generates a larger understanding of the market. But
Hmm.
you also understand who are noobs and who you shouldn't listen to and who are kind of just there to scam noobs, or like it's a whole huge ecosystem, probably in mainstream finance as well, and junk bonds. Like that's what Wolf of Wall Street's entirely about, right?
Hmm.
Um, and there are big accounts that make money doing Wolf of Wall Street type stuff. But yeah, you have to find your niche, I guess, over time.
So we have a completely different niche: foreign currencies. Taking
Hmm.
a separate turn. They There's one idea that there's going to be 21 million Bitcoin. Yes, they're still making some, and we have the halving coming up. We're going from 900 a day being produced to 450. The other thing they're going to keep making is fiat currency. And we know the schedule of Bitcoin. We don't know the schedule of fiat, but very rarely do they, go and deprint money. Even if central banks do
No
buyups of
burns.
stuff where they're not burning. If they're selling assets to do reverse repos back in and suck money up, right? It's reverse repos, not repo. Yeah, to suck money back in, they still have it. It hasn't left the system. It gets used again. So there will be more fiat. There will be 21 million Bitcoin. The Nigerian Naira, and it's a massive economy, huge amount of people. All-time highs there. Argentine peso, all-time highs. And the country most people aren't going to pick unless they follow like foreign currency and bond markets is the Japanese yen. That's a
Yeah.
major Eurozone, US, China, Japan, right? Major economy in the world, top
Mm.
10 economy,
Totally.
and their currency. Now they've had their economic production and their currency management. There's great documentaries about it. It's a huge mess, but Japan is at mega all-time highs.
Oh my
So
God.
I'm just, that chart's got to hit everybody where it makes our little USD chart look small.
Yeah, I mean, I guess like if you think it's when Bitcoin hits all-time highs, it gets all over the news in America. I assume it does so in Japan, and each one of these countries is kind of like all-time highs being reached against your currency. And in some of them, like Nigeria, it's not just all-time highs; it's like
Hmm.
like two times all-time highs or something already.
And it's
Yeah,
currency management. Nigeria is this growing, successful country. Like that, people aren't bailing out of the currency to bail out of the country. The country's economically
mhm.
booming and growing. They're just bailing out of the currency.
Yeah, totally, exactly. I mean, I guess like maybe this is kind of akin to like transportation and like in the past where like all the So currently, all the banking rails are run according to like, I don't know, horse carts or like something like this, and then Bitcoin comes along and it's just trains. And suddenly, in the switch to cryptocurrencies, CBDCs, and all the rest, it's so disruptive that like the first currencies that will suffer are the weaker, smaller currencies. Like, why
Hmm.
would you hold a? So I saw a tweet where, or a podcast where they're talking about in Argentina, people buy cars because cars hold more value than the currency.
Hmm.
Obviously, cars are depreciating assets in the rest of the world, but in Argentina, they're considered like holding your
Appreciate,
wealth.
yeah.
Yeah. Um, so it starts to get ridiculous, and then people do things like, yeah, of course you would buy Bitcoin if that's the case. Like cars are not movable. You can't, have several, or like what if your garage is like, I don't, that just makes sense. So you buy Bitcoin, you buy gold. And so in these systems where they're kind of starting to break down because they're all janky and old and printing lots of money,
Hmm.
in the past that was fine. Well, not fine. I mean, they didn't really do it as much, but now there's all these other options. Yeah, it's pretty crazy what's going to happen, I think, with global forex currencies.
Well, and you're saying the
Because everyone has
systems,
that second currency,
yeah, this everyone has a
Bitcoin.
quick option to it. For anybody watching in, Europe, US, you're used to holding a strong currency where you trade out when you go on vacation. But for those of us who have lived in places where you hold money in foreign currencies and watch people do their whole lives through a non-efficient banking system in places, they're desperate to get out. They've been, I mean, we've seen it are everywhere for as long as we've been overseas, usually
Yeah,
desperate to get
Philippines.
out into dollars, and now there's a way easier way.
But
Something else I want
how
to,
do you hold, like if you think about the naira, how do you hold that value in place? It's by not letting people exit it and get out of it. And
yes.
so like, even the Philippines, when I lived there, in order, first of all, most people didn't have dollar accounts, and if
Hmm.
you did, you couldn't transfer between Philippine peso into the dollar account. And if you wanted to send money from the dollar account, you actually had to fill out the paper, like in the
Hmm.
old days. Go into the bank and do it there. You no online banking for foreign transfers because of laundering and stuff, but also because Philippines doesn't want fleeing of their currency through this mechanism. But when
Hmm.
people have the mechanism directly, yeah, it's a new experiment.
Yeah, Tunisia was the same as the last place I was before being back in the U.S., and it was, I want to say, like about 6,000 euros a year is what you could change for travel purposes. No holding euro and dollar bank accounts locally. Yeah, very, very controlled. And for a long time, it kept the dinar itself artificially high as everything else ticked down. It stayed good, and then it's been collapsing now. The country's going through some, government mess, but yeah,
Because behind the
no
scenes, the
option for
government was
people to leave.
spending,
Oh, yeah,
yeah, the
they
government
spent
was
all the money.
spending to try and to basically, yeah, defend the dinar.
Hmm.
Essentially, yeah, and that's essentially what's created this export of inflation overseas, because that's yeah, America has essentially been exporting its inflation.
Yeah,
That's why inflation is relatively controlled in America. I was
as we
watching
make more
another
dollars,
podcast as
more
well.
people in the world have access to scoop up the dollars because there is a dollar market large beyond the U.S. There's not a Tunisian dinar market beyond. I mean, there's a
Well,
part of
especially yeah,
Algeria where they come over because the gas is taxed differently. So, aside from that, those few towns, no one else needs dinars.
yeah, well, exactly. I mean, and it shows that people are still buying. They would prefer to hold dollars than dinars, irrespective of the fact that America is printing lots of dollars. And so it kind
Hmm.
of shows that irrespective of the printing, irrespective of all the doomerism in this, there's like, I don't know, maybe one way of putting it is there's more doom further out. And so like, yeah, I mean, the American economy is actually ridiculously strong, like despite
Hmm.
what everyone would tell you right now. If you compare it to the rest of the world,
Yeah.
it's crazy strong. And all the numbers are correct. All the unemployment is low, even though, yeah, they're part time versus whatever. Um, yeah, it's interesting. Kind of the perception versus the reality of what is the actual, circumstance is quite interesting to watch. Yeah.
And the last thing I want to touch on, you were talking about the systems there. Um, you can't sell part of a car if you're holding your value there. You can work in Bitcoin and do parts of it. The other thing, and this is something your brother used to work in, and we've seen internationally. We should have him come talk about this, but is mobile pay. Um, adoption for tech here. When I came back to the States, everyone, even at work the other day said, "Can we Zelle you your mileage money?" I'm like, "Can't you just write a direct deposit? It's work." But Zelle, Venmo, riding on the backs of banks are the new mobile apps. Overseas, people have been doing on Nokia's texting. They've been texting money for years, and there's systems there where the telecom companies manage those accounts. So if you're already used to texting money on a Nokia, a Bitcoin wallet doesn't seem that bad. If you're used to your bank direct depositing and your auto pay is going from your credit card, it's a bigger step. So we have these failing currencies. We also have countries that are full of people who are on, just because of the necessity, they're on the edge of what's possible. Mobile phones went in, landlines didn't because of the way tech jumped. Because the banking system wasn't strong, they then used those for text to pay. Because you can do that, well, of course I can put some Bitcoin on my phone.
Well, yeah, and the your margin of cost is much more relevant. Like, I did a calculation back in the day. Like, so in the Philippines, 20% of the Filipino economy is from foreign workers
Hmm.
sending their money, remittances being sent back home. One of the larger ones in the world, all over the UAE, nurses in America, etc. Um,
Hmm.
Usually in the past they would send money back with Western Union, and Western Union takes up to 10% of 5 to 10% um, of your payment. And so if you think about it, if 20% of the Filipino GDP is remittances and they're taking 5%, it comes to about 1%. 1% of the entire GDP of Philippines is going to money transmitters,
Hmm.
um, which could now just be shifted across one of these networks for free. That's
Yeah.
huge for the Philippines. And that's not just for the Philippines. Here's the government. What are you going to do with this money? It's trickling specifically down to all the people who are already in work, boosting their ability to spend that money on things they actually need rather than paying Western Union. So pretty cool.
Yeah. Yeah. Um, ETH ETF is coming up. Bitcoin ETF was sell the news. I bought my ETH. I
Was
did I
it?
did one ETH trade um over like 4 years, selling a bunch right before FTX or right after buying a bunch right after. I've been sitting on my Bitcoin since around FTX collapse. I just did like that one move. I'm gonna ride it through. You took the
Yeah, of course.
Bitcoin ETF, um, had your levels, you traded it, you came back in. ETH ETF, right? It's the same ETF. It's the same people buying in. What is it going to be the same play? Oh, and also, do you do the same play as a trader?
Yeah, too early to tell, right? But essentially, if I were to guess, random guessing into the dark, it's going to depend on a lot of things. But my guess would be that ETH rallies into the ETF, but then there's also a possibility it gets denied because
Hmm.
ETH hasn't been traded on for long enough and some sort of record that they need
And
2 years. They could possibly deny
4%. There's a lot of talk
Well, they
of the
won't. They
staking
definitely
as
won't do that.
security.
Yeah. Yeah, they definitely won't do the dividend part. They'll just allow the ETF of ETH alone. Um, but I mean, I think yeah, like to me, the way Bitcoin has rallied so hard, no one's going to remember that Bitcoin crashed for 10%, 20% off the high. So I think that probably rallies and just keeps going in, and then maybe I'd probably try and pull the same trade again, buy back earlier, but who knows? Long time from now, May. So
You
between now
said,
and then, though, it's great.
okay, first, yes, I'm with that. I think a lot of people see where Bitcoin went and don't want to fade the ETH ETF. The two hiccups are ETH is stakeable for 4%. That's been pointed to as something very different and might kick a securities thing. I really don't know how I feel about that. I don't think it will, but um,
I don't think.
you said if they, and when I said it before, you said if they don't pay the dividend. Well, if I have, $1 billion of ETH AUM, it's sitting at Coinbase. I want to keep 20% liquid to for people to exit. If I'm staking 80%, and am I just taking that 4% as a management fee? Because that beats the hell out of the 0.25 Bitcoin fee.
Yeah, it's an interesting question. I think it would be about stability and security. They're just not sure if the staking is as secure to secure that much amount of money, and 4% is the security fee of not doing that and being first to exit if anything goes wrong.
Or 4% is on par with close to 10-year bonds and free money flow when you're only making 0.25 management fee, because 0.25 to
Eventually, yeah.
4% is a huge difference there in fees. It's not just for, you know what I mean? It's
Oh yeah, definitely. I mean, but I think like comparing ETH to bonds at this stage would be too premature because bonds are very safe. You get 4% because they're so safe, whereas getting 4% for locking up this supremely volatile asset, I'm sure they would just be like, no, screw it. If it's going up 200%, I don't give about 4%. I just want to be able to sell it immediately as soon as I want. That kind of thing. So I think you'll see staking cap out, but I think it'll continue to rise and become a narrative unto itself. What I'm really worried about is restaking. So Egan
Yeah.
layer is great, but but I'm sure after Egan layer or alongside Egan layer will occur many other restaking options. And essentially, we're just reintroducing it's kind of like in The Big Short, where the guy's talking about CDOs and inside of CDOs, creating synthetic CDOs. It's almost, to me, it's almost exactly the same. I could be totally wrong, but where you're creating a leveraged product on a product that is already leveraged. And so it's like by itself, it's not a problem, but then what people do with that will become the problem. So I don't know.
Yeah, there was the old anchor
yeah.
trade where you borrow money to put into anchor to borrow money or something, or there was
Yeah,
not,
totally.
but like you can rehypothecate, and then Egan, if I understand it correctly, you're taking staked ETH, or you're staking ETH for them, or you're taking your staked ETH, and your staked ETH tokens you stake on their network, and their network then pays you in their token because of the staked ETH you had or something.
Something along these lines, where I think it's essentially because you have a staked ETH, it has a value by itself, kind of like a bond where you buy it or UST, and it goes up and down with percent. And that staked ETH should therefore be worth a floating valuation, and so then people can take that, make derivatives out of it, and bet on it.
I mean the derivative, blah, blah, blah. It's ETH with a 4-day unlock is the difference of the product. That's what they're putting the price difference on versus taking straight ETH,
Yeah,
which
exactly.
also
Yeah,
pays 4% along the way that you make your bet.
yeah, totally. And so you can see one day in the future where it's like the staked ETH versus ETH has depegged significantly, and people are like, oh no, what's happening? And then you see it's like a flood of people trying to unstake their ETH and they can't do it, and then they start to try and sell the staked ETH, and it like continues to plummet. And I don't know, all these games that happened back in the day where people's fear isn't really factored into the math, and so it'll be interesting. It happens every time. Money experiments and alchemy are always very interesting. Lead to fireworks. That's how fireworks is invented, right? So
You're saying when it's tied in and people are on a couple-day delay, they're selling their Egan layer to get back their staked ETH so they can go back to exit the ETH market because something's happened on this end. And when all that stuff that was tied up collapses because some side system does, and it gets flooded back in.
Oh, they see it start panicking, kind of like with Luna, and it's like if everyone just stopped panicking, it would have been fine. But everyone did panic, and then these people over here who we don't even know about took a leverage position with some VC like 3AC on their staked ETH, saying that we only collateralize it with 30%, and then it's down at like 15%, and then they go under, and then that causes these guys to go. I don't know. Like the underlying is not the problem. It's what people then
they're going to play games
able
with
to
it,
do with it.
and if we add games to the system plus the games they're going to secretly add on.
Yeah, exactly. It'll be it's explosive. We'll see. I mean, maybe regulation can tame it by then, but I doubt it.
Yeah, and it's a worldwide market that's still a small market cap that's easy to push around by big events like this.
Yeah, definitely. So yeah, we'll see.
Sweet. So to the moon, right?
Yeah, right now it looks like it. Looks pretty good. Who knows? Maybe 55. Hopefully, I mean, to be honest, I hope
Wait,
Bitcoin just kind
55.
of
You're
goes
talking about
sideways.
next time we podcast or next time I wake up?
Could be both. Could be both. Who knows? But yeah, so one of the things that's changed is that in the ETF situation is that before you were seeing like lots of grayscale selling, and then it was tapering, but was also tapering is the buying, and now it's just spiked right back up, 500 million from
Every trade fi and blah 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 who's certified and going to manage the money. The inflows were as it trickled down, and as it went back up, they got excited again. I'm like, everyone's the same as us. Everyone's got
Yeah,
emotions.
totally. Yeah, we get to watch TradFi be FOMO degens as well, and just be like, wow, you guys are just like us, but older. It's funny.
Man, maybe not. Having talked to people who've done it, they're probably all 24, going to do it for 4 years, go all in on Bitcoin, and then leave to go start a consulting firm. Everybody in TradFi who's not upper management is like 25 years old.
Yeah, that's true as well, for sure. Yeah.
I'm
Well, we'll
generalizing,
see.
but why not?
Yeah, totally. Well, I mean, it's interesting because back in my day, you really were in crypto if the way you got in was by being a trader, right? Like it's just like everyone was like, oh yeah, I actually do this, as well as everyone just assumed you also were a trader. Now these days, you actually meet almost most crypto people, and they're not traders; they're just crypto people, and then they maybe buy coins and stuff. But like actually understanding the market dynamics or looking at charts or any of that kind of stuff is just not really part of the thing.
And
It's
that's one of the
interesting.
things I love having the more NFT focused Law and Nick on when they join us is
Definitely.
yes, they both trade coins a bit. They've been in crypto a while, but they they really mean it when they're not here for that. Like I've known those guys long enough that they would be into NFTs and the culture if there wasn't crypto gains around it.
Yeah, it's a maturing ecosystem. It's good. It's cool. I mean, that's the last shout out would be like to Pudgy Penguins, right? Pudgy Penguins just has like killed it. Like they just flipping all sorts of collections and continuing to go to the moon. So yeah, power to them.
Yeah. Sweet. We'll be back in a couple of weeks, man.
Party on.
Good luck to the bags. I will be sitting on them doing nothing.
Very smart. Very smart.
Wait, what's this
All
whole big
right.
announcement coming soon? Oh, yeah. 5, 4, 3.